Hello, everyone. I think we're nearly ready to start. We'll start at 12:30 on the dot, as usual. So that gives us a few more minutes, a few more seconds. Sorry, about 5 seconds. We'll get started. Um, we're doing this again in three different ways. So you can watch this via our Facebook Live page, our Facebook page, on Facebook Live. You can watch it on YouTube. I think there's quite a few people watching on YouTube, and we're still doing it via webinars. But the webinar way of watching it is going to end at the end of July, because I think YouTube's the easiest way of watching it, because you don't need to enter your details. If you're subscribed to the channel, you get automatically notified when we go live. We do it every Wednesday at 12:30. So from the end of July, there'll be no more sort of webinar way of watching it. It'll be Facebook and YouTube. Okay, let's get started. Let's just put the risk warning up there first. So if you haven't attended one of these before, every Wednesday at 12:30, we do this look at the major markets. So we'll take a look at the pound, the euro, take a look at stock market indices, so the US markets, and a quick look at the European markets. We'll also take a look at the cryptocurrencies. If there's anything interesting going on there, we'll pick up on those as well. I think it is interesting at the moment. We'll have a look at Bitcoin whilst we're doing this, and gold and oil. And I think oil is an interesting one. I mean, it's not moved much over the last week. I wrote something about it for the website that went up yesterday. There are sensible arguments for oil being $20 higher or $20 lower. It's a real fence sitter at the moment, but we'll take a look at oil as well and talk a bit about trading strategies on this. And we do it every Wednesday. If you're watching on YouTube, if you subscribe to the channel, we do try and put up a video almost every day. So again, a look at major currencies, cryptos, gold and oil, and trading strategies. I think there's a video from about a week ago covering popular trading mistakes. But let's get started. So I think our risk warning has been up for long enough there. Everything appears to be working. So I think the obvious market to start with, let's just flip onto the trading platform. This pound US dollar, because clearly this has been, or what's going on in the UK this week has been a major focus on, let's just walk back. This is Sunday night. This is the Sunday night open for pound US dollar. Hopefully I think you can see that on all the different platforms. So we saw it gap higher. It opened up at 132.70 after ending Friday about 132.45. I don't know what this is down here. We've got a bit of a duff price in there. But we had that news on Sunday evening, late Sunday evening, that the Brexit minister, David Davis, was resigning, or had resigned. And markets, you could say, well, if you're looking at that before the market opens, you could take the view, well, hang on, a senior government minister resigning, that's not a good thing. So plenty of people might have expected the pound to fall. But of course, the markets took it as the fact that we're going to end up with a softer Brexit, so a soft Brexit from a financial markets point of view. That's what they wanted. So they saw that as a good thing, which is why we had this knee-jerk move higher. And I did think, when I was watching it on Sunday night open, I thought this could really set the tone for the week. We could be a week where the pound pushes higher, after this gap open. But then, of course, later on Monday, not wishing to be upstaged by David Davis, Mr. Boris Johnson decided to resign as well, and markets did not take that quite as well. This is the move, I think, on later on in the day when Johnson resigned. So we saw the market sell off. So it's been an odd week. It's been really driven by what's been going on politically. But let's take a look at the bigger picture. And we've had, I think, a couple of days of fairly quiet trading for pound US dollar. But let's just take a quick zoom in and have a look at what's going on. So this is the daily chart. I've flipped it back to now. So going back to when's this? Back to November last year. And I think it's interesting. Let me just step it out a bit. I think we were talking about this level on last week's webinar. Let me just let's leave that line in there and just pick up on the old lows, because I think it's interesting down here, because when we were down at these levels, sort of 130, 130.50 was what we were talking about over the last couple of weeks. we had seen something of a major turnaround, sort of September, October last year. And, when we look at previous levels, we always wonder, well, are we going to see a similar sort of thing happen again? We're going to see that the buyers come back in. And we have seen that for the pound. This, like I say, it's a daily chart. So since, the 29th of June, beginning of July, we have seen the market stage some sort of turnarounds. But arguably, we're still under a bit of pressure, on this latest bit of the trend that's been in place since the 14th of May. But basically, if the market's going to turn around anywhere, then 130, 130.50 is the big level to watch. What would be interesting now, I think, clearly there are a couple of ways this can go, but what would be interesting from here would be if the pound came under some pressure. So we're currently trading at 132.50 pound US dollar. If it came under some pressure and drifted back to these old lows, do we see them hold? And if we saw it bounce ahead again of 130, 130.50, it does build the argument for this being a major turning point. But let's not get too excited. Clearly the pound has been clobbered over the last 3 months. Normally major trends like that, or sort of intermediate trends like that, take a while to turn around. So let's maybe, we shouldn't expect it, I don't think, to be up at 140 anytime soon. But let's see if it can build a base down here. For fans of the oscillators, I think I might have talked about this last week, but I'm not a fan of just looking. This is an RSI down here, and I'm not really a fan of just looking at the overbought or oversold signals, because the problem is, in a strong trending market, you get these signals normally far too early. So, we can see here the RSI went oversold beginning of May and pushed lower again, and was still oversold. So I think just looking at straightforward overbought, oversold isn't really a good way of using them. I think maybe one of the more effective ways of using them is looking at this idea of divergence. So we did have a bit here. It doesn't happen very often, but when it happens, I think it's a reasonably half decent signal. So you can see here the market pushed lower, 21st of June, pushes lower still to the end of June, but our RSI is just about making higher lows. So that's bullish divergence, and it can suggest, when the market's going one way, but the RSI is going another, that maybe the weakness is running out of steam. On the upside, it hasn't managed to push above here. We've still got that downtrend in place. I think that the really big level on the upside are these old highs just before it nosedived towards 130. So I think the old highs up, 134.70. That sort of area. Let's round it up to 135. So I think, for the pound, 130 on the downside, 135 on the upside, and we need a breakout, but for now, at least, that 130 level has held. And this week, if we just maybe flip it over to an hourly, since we had all the excitement on Monday, we're just seeing just somewhat flat trading now, maybe waiting for the next step from the government, see what happens next. But because it was building, something of a half decent recovery. There's that trend line coming in, broke through, and then Monday's political shenanigans has knocked some of the wind out of the sails. Let's see what happens. In the really short term, if we're looking at short-term levels, I do have a trade on. You can see I'm losing a bit of money at the moment. I'm down a couple of quid. You can see at the top up there. I've had a trade on pound US dollar, buying it with a stop under these old lows at 131.90, and it's just not done anything. So for me, in the short term, that's one level to watch, 131.90. But the bigger levels are those big picture daily charts. Okay, let's see what happens. So next market, we look at euro dollar. Okay, so I think the pound is the interesting one, but it has gone a bit dull after all this political nonsense earlier this week. So euro dollar is just pretty much as it was a week ago. Yeah, we've got hang on, we got the lows, these big lows that we were talking about. Similar sort of setup to what we've seen on the pound. The lows, okay, it did spike below them. The low from last year was 115.50. The low from November last year. We did see the market move as low as 115, but it's held, but it's trapped again. We're just stuck. So at the moment, pretty directionless, stuck in this sideways range, but any weakness back towards the low 115s looks like a buying opportunity. And on the upside, it just can't get through 118.50. So we are somewhat stranded and somewhat directionless. Let's just take that out. You can see we did have a good little trend chugging away on the hourly chart, that's broken. It's broken out the trend line, but we've argued there's arguably, and clearly, of course, this isn't financial advice, but if you really wanted to do a trade, there's arguably an interesting setup here. So the 10th of July, when was that? Yesterday. So yesterday's lows, yesterday morning lows, it looks like coming in at 116.90. The market rallied to 117.50. It came back again 10 o'clock today, 116.95, and it's bounced. So in the short term, very short term, yesterday's low was 116.90, underpinning the market. It wouldn't surprise me to get another squeeze, maybe up here, having a look at 118 again. So I think if you really wanted to sit there and click buy, sell, buy, sell, buy, sell, maybe that's the interesting level to watch. But the daily picture is pretty dull. Euro, US dollar. The 115 lows have held. We've arguably broken the back of this downtrend that's been in place. But bang, 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 you can see it. Just pretty sideways for much of June and so far into July, that those wide levels holding. Someone asked earlier in the week about on the, I think that on a YouTube video earlier this week, can we have a look at euro sterling? So while we're doing this, we'll have a very quick look. Euro against the pound. If you're thinking about what's the best levels to buy your euros at with the summer holidays coming up, it's just dull. It's been a really dull market, euro against the pound, for the best part of 10 months now. Okay, we've got this wide sideways range. It had a little breakout of the sideways range in April. It's ended up being something of a false breakout. It's pulled back into the range, and it's pretty directionless. It doesn't mean you can't trade it, but you can just see we've got the euro against the pound stuck, pretty much in this just going nowhere sort of thing. So when the euro is down around about 86. See the buyers come back in. When it gets up to 89.50, 90, the sellers come back in. So relatively speaking, it's just a pretty tight, dull range, and no immediate signs of that changing, I think. So I think there are more exciting markets to watch if you want to see something a bit more volatile. Let's take a look at stock markets, because of course later this week, President Trump makes his visit to the UK. I think he's in Germany at the moment, isn't he? And it's interesting. We've seen a big move in US stock markets ahead of the open today. I think at one point Dow futures were off around about 200 points. And it seems like they've recovered a bit. Let me just zoom in to show you. This is an hourly chart. So I think last night's close was up here somewhere on the Dow, closing at 24,920-ish. And in the overnight market, early hours of the morning, sort of 3 o'clock in the morning, it was off. How low had it been? How low did it go? 24.6. So it was off 300 points at 3 in the morning. And it's all about, it's this ongoing trade war, the trade tariffs, all of that sort of stuff. And that's been the concern about this, particularly when it comes to China. We have seen the market, recover a little bit, but maybe we're going to see something of a volatile session this afternoon. This week sees the start of US earnings season. So we start seeing US companies reporting on how well or how badly their last quarter went. And the big one for this week is Friday. So we hear, I think it's JP Morgan and Citibank, Citigroup, whatever they're called, report on Friday. So it's when the banks start reporting, it could get interesting. So it's a lot of focus on the stock markets for me. But let's just take a step back and look on the daily. So, if we need reminding, we saw that massive burst of volatility earlier this year, so late January, early Feb, when stock markets fell off a cliff. Since then, we've had pretty wide swings. But it's a long time since we saw, relatively speaking, a long time since we saw fresh all-time highs for the stock market. And I think I've been saying for a while now, it wouldn't surprise me if this just continues. There was psychologically, I think it was a big shock to plenty of people who just taken for granted, if we zoom out, that stock markets just go up. And of course we had that reminder that they don't go up. So I think we're just, particularly with all this trade tariff stuff going on, we're just in something of a sideways pattern, maybe a triangle for people who are fans of chart patterns. You could argue we've got, I don't know, that sort of thing going on, something like that. So it needs to break out on the Dow. What's interesting, I think the market I tend to look at is the S&P 500, because the S&P, not the S&P 600, the S&P 500, because that is a much broader US index. The Dow is only 30 shares. The S&P 500, as its name suggests, is 500 shares. What's interesting here is that over the last couple of days, the S&P has dragged itself up to the March highs. So the March highs up around about what, 2740? No, I'm reading that wrong. What's wrong with my eyes today? The March highs around about 2800. Yeah, and we came up here 27th of Feb, came up again 11th of March, came up again 12th of June, and come up again the last couple of days. So if the market's going to run out of steam, and clearly it's got knocked overnight on that trade tariff stuff, this is an interesting area up here for the S&P. You know, at 2800, we've got the old highs, the old all-time highs, just above 2880. So I think it's going to be an interesting few days, you know, with earnings coming out, with the whole trade war, trade tariff thing going on. Does the market think, well, actually, it's gone far enough for now, and we'll see some selling coming in? So I think the big line in the sand for me is going to be these old highs from up here at 28.0. Let's call it 28.05. Let's round it up. So let's see what happens this afternoon. But you know, a bit of a knock in the overnight market, as we can see there. So far, it appears to be stabilizing. So we could have something of a volatile session, but it wouldn't be surprising if we do see the market rally this afternoon and we push up to 2800, that maybe we see some nerves coming back in, you know, because it has been such a big barrier. And of course, to keep things balanced, you know, on the other hand, because we don't know what's going to happen, all we can do is look at different scenarios. You know, if we see a solid break through 2800, let's say a couple of days where it holds above, we've got to start looking for a run back to those old all-time highs, you know, those sort of late January highs before it fell off a cliff. So I think it could be an interesting week for stock markets. You know, it started off being an interesting week for the pound. That's gone a bit dull now. But stock markets with those bank earnings coming out later in the week, maybe one to watch. But on the S&P, sort of 28.05, I think, is the big one to watch. Just have a quick look at the FTSE. I think I said before, I don't normally pay that much attention to the FTSE because it tends to just follow whatever's going on in US markets. I mean, clearly we had the exception here from the 27th of March, you know, pushing out to all-time highs, helped higher by the pound weakness we were seeing. That's always lifting the FTSE. It's interesting, though. It's had to go the last couple of days. You can see, maybe if we flip this over to a 4-hour chart, we'll see that. We'll see, you know, a bit more clearly how since the beginning of June, what's the level? 7780, 7800 has been a real barrier for the FTSE. And then 7700 has been a barrier for the last 2 weeks. And it's continued to be a barrier again over the last couple of days. So it's a pretty, I suppose, relatively speaking, it's a pretty tight trading range. But any strength up towards 7,700, 7,800, we see this market running out of steam. And clearly, I think to crack it, what we'll need to see is strength in these US markets. You know, we'll need to see these US markets crack their levels. So like I say, I think an interesting few days ahead. Let's take a look now. We've got about, I think, 5 or 10 minutes left. So I tend to whiz through this quite quickly. Now, let's look at the cryptos first. Have a quick look at the crazy cryptos first of all, because I think this is interesting. I think clearly, you know, if we look at Bitcoin, I mean, it's been a fascinating 12 months for cryptocurrencies. You know, we had which we can all look back in hindsight now and say this was obviously a bubble, you know, the move up to just shy of 20,000. But what's been interesting is the moves this year. I mean, volatility has died off massively. You know, we're still seeing, but by maybe the standards of other currencies, we're still seeing relatively big moves, but nothing like the sort of moves we were getting towards the end of last year and into Feb this year. And we do this weekly video update on the cryptos. But what's interesting, let's look at this like a normal market and not, you know, not a cryptocurrency. What's interesting is the levels that we're seeing hold. You know, if we go back on Bitcoin to just before it went parabolic, November, December last year, we had a bit of a sell-off to $5,500, then off it goes. The bust into Feb, we saw buyers again at 5,500. Then again here, 1st of April, sort of staying strength coming in at 6,000. And over the last, what's this now? Over the last 3 weeks or so, you know, once again, we're seeing lows of 5,700, low of the week of 5,765. So the market, you know, looking at this as a support level, like a normal market, the market is seeing value, inverted commas, for Bitcoin whenever it goes sub 6,000. So, if the market, if Bitcoin is going to rally and stage a recovery from anywhere, like it has done all this year, this is a really interesting place to watch. We've seen half decent bounces up to 11,500, up to 10,000. Let's see what happens. But going back again to this idea of RSIs and divergence. We've got a bit of that going on with Bitcoin at the moment. The market slips to a low. The RSI is oversold. The market bounces a bit. Market slips lower. RSI makes a higher low. So this is bullish divergence, suggesting that maybe the strength the weakness, is running out of steam. So I think they're nowhere near as exciting and crazy as they were 10 months ago. But I think it's interesting down here. And personally, I wouldn't even bother looking at the short-term charts. I think it's very easy. It's interesting that we do see these sort of hourly surges, or we had been seeing hourly surges on the cryptos. But for me, it's the daily chart is the really important one. And it's interesting that we're back at levels where we had seen buyers come back in. So that's the crazy world of Bitcoin, finding support whenever it slips sort of sub 6,000. So maybe we'll see some sort of recovery there. Of course, the flip side is if we go below, it's been such a good support level. If we go below 5.5, maybe we'll see even more people throw the towel in and rue the day they ever bought it. But so far, 5.5, it's doing a pretty good job. Let's take a look to wrap things up today at gold and oil. So oil's an interesting market, and gold is maybe getting interesting. Now let's just zoom in. And again, it's all about the levels. If you've been like a long term watcher of these webinars, I talk about the importance of these big levels a lot, because clearly they do mark major turning points in the market. We saw it in gold September, November last year, up above sort of 1350, 1360. All this year could not make much progress to this level, kept knocking its head for 3 months in the 1350, 1360 range until finally it broke, and it broke down, and it traded as low as 1240. But what's interesting is what we've seen over the last week. We had this was the sort of the pre-Christmas low. We had this really big surge in December of last year for the price of gold, and we're back here. We've come back here over the last week and a half. We've seen this what's known as bullish engulfing. Can I zoom in on that a bit to show you that? Where we have, let's just zoom in a bit more. So we had a down day. These are daily candles. So the down day, then a big green candle, bullish engulfing, which can often suggest a shift in sentiment. And we have seen that so far. Doesn't mean it's going to do a complete handbrake turn, but I think it is interesting down at these levels, because 1240 was such major support for gold during December. If it's going to bounce from anywhere, this is the place. At the moment, though, that trend is still down. You can see it sold off quite heavily over the last couple of days, but I think this is interesting, and this is going to be the test now. Okay, we saw a sharp reversal. What was the low? $1,238 an ounce was the low. If we see it drift off, do we see the same thing happen again? At the moment, we've got an oversold RSI. Haven't got divergence there. We haven't got a lower low on the price and a higher low on the thingy, on the RSI. But it's an interesting one to watch, I think. Do we see gold start to build a base from these levels? I think it's too early to tell, but let's see what happens over the next couple of days. Do we see the strength come back in? And finally, price of oil. The crude oil, let's bring that up. Here we go. I think it almost feels as if this is a market that has rallied via stealth. In the summer of last year, or June last year, so just over a year ago, it was $42 a barrel. It's recently, in the last week and a half, 2 weeks, traded above 73. So we've seen, what's that? It's a 70% bounce back in the price of crude oil over the last 13 months. And you'd have thought, most people would have thought, that it would have more of an impact on the wider economy, but we haven't really seen that. And I said I wrote something for the website this week, just looking at the arguments for and against a higher or a lower oil price. On the arguments for an even higher oil price from here is the effect that the US's tariff sanctions on Iran will have to supply. will restrict supply, so that would push the price higher. But there's also the fact, I think, that OPEC and Russia have committed to producing more oil, so that would push the price lower, which is why I think we have what looks like something of a tug of war going on over the last couple of weeks. We've seen the price push out to its best levels in about 3.5 years, I think, but no real momentum carrying it past that. So I think it's a difficult one up here. I maybe wouldn't want to trade it up here, but if it sells off, let's say it does drop back to the mid 60s, the price of oil, where we were just in June, that big trend from last year is still very much intact. So I think any move down to the mid 60s from a technical analysis trend point of view looks like a buying opportunity. And I think it's only if we start to lose these old lows ahead of 63 that we have to think about a deeper sell-off. But I think for now, maybe in the short term, a bit of weakness, but yeah, it doesn't change that bigger picture. So for me, that trend is still up as long as 63 holds. It's maybe a bit overcooked, a bit overstretched at the moment. You can see it on the RSI down here. It's gone overbought. So I think maybe the more interesting thing in oil for me would be a bit of a sell-off back to the mid 60s, and let's see what happens there. Later on today, we've got the oil inventories. So every Wednesday afternoon, the US basically reveals is maybe a bit dramatic, but announces how much oil it's got stockpiled. So that happens every Wednesday. So we can often see some volatility on the price on Wednesday afternoons. But I think that for me, that's the important chart for oil, is the big picture view of that trend since last year. We'll start wrapping things up there. Before I do, though, I'll just show you this. For those of you who are clients, this is our new platform. So which is in beta at the moment. So if you're a client, you may well have access to that. So that is coming soon. I think just a few bits and pieces that need to be tested. So the one I've been using today is our existing platform, but that's coming out soon. So keep your ears peeled, your eyes peeled for that. We'll start wrapping things up there. If you have any questions after this, you can drop me an email. My email address is david.jones@capital.com. Obviously, to find out more about the company, open an account, all that sort of stuff, you can go to Capital.com or download the Capital.com app from wherever you get your apps from. And you can follow me on Twitter. I'm at Jones the Markets on Twitter, and I try and tweet, big levels or when we do a new video and all that sort of stuff. And if you're watching on YouTube, then if you click on subscribe, you get and click that alarm bell thing, you get notified every time we upload a new video. And if you're watching on Facebook, go to the YouTube channel and subscribe. Just search for Capital.com on YouTube and you'll find us there. But we'll wrap things up there. So I think interesting markets to watch. The pound, when it wakes up again in a bit of a holding pattern after the excitement at the beginning of the week. US stock markets, or stock markets in general, because we're now into earnings season for the US, and we have these trade tariffs, trade war worries hanging over us. So I think it could be an interesting end to the week. Those big levels, those old highs on the S&P are the big ones to watch. And also gold, because maybe after a couple of months of sliding, we're seeing something of a base build. I think there's a few things there to keep an eye on. But we'll wrap things up there. Thanks for coming along. We'll do it all again next Wednesday, same time, 12:30. Okay.